Good morning, everybody. We're going to do a quick audio test before we kick off our presentation for the day. If you can hear me, please type yes into the chat box. Thank you. All right, thank you for joining our summer CPE learning series. Today's webinar program will be presented by Richard Ruvelson and Tracy Boak for our webinar, Making Some Sense of the State Charitable Registration Wave. Before we begin, I have a few housekeeping notes. Materials for today's presentation can be found in the toolbar located on the right hand of your screen. At the bottom of the toolbar, you will see a question box. All questions pertaining to the webinar content will be answered at the end, or as we are able to answer them throughout the webinar. We will do our best to address them. Please be sure to answer all polling questions to ensure that you receive CPE credit for today's session. And once the webinar is over, there will be a pop-up asking you to complete a survey of the webinar. Please take a moment to complete it. It's our way of being able to provide you with the best and most relevant programs possible. And with that, I'm going to turn it over to Rich.
Okay. Thank you, Ashley. And before I introduce Tracy, I just want to wish Ashley a happy birthday today, and also apologize to all of you. We're having some technical difficulties here, so unfortunately, you only get to look at me. We can't get Tracy's camera going, so that you can see it. So we apologize for that, but the audio is still good. And we're very appreciative of having you all here today. And it's a great opportunity to learn about state charitable registrations. And Tracy is a partner at Perlman Perlman in Manhattan. And we work closely with Perlman Perlman. We're lucky to work with Tracy on occasion. And in addition to being a partner at Perlman Perlman, Tracy is a former regulator with the state of Pennsylvania. And so this is a really good opportunity. She formerly ran the office, the state charities in Pennsylvania. So it's a really good opportunity to hear not just what requirements are, but also what regulators look at. And I want to just mention very briefly, for some of you that think that, well, do we have to register? Do we have to comply? There's some expense involved. It's hard to do. The expense is manageable, especially as compared to the potential for negative publicity. And I just want to let you know about one of my clients. My first exposure to this was when I was out in Los Angeles, and one of my clients was a celebrity charity and was just enjoined. Not long after I got to LA, they were enjoined by the state of Connecticut. And if you're well known, even if you're not well known, you don't want the Attorney General standing on the state steps of the state capitol. In this case, it was a young politician. Some of you may have heard of Joe Lieberman, who was the Attorney General of Connecticut, who enjoined my client from soliciting in the state of Connecticut. And so you don't want to be in that situation. And in addition to that, you should have just because you want to, and it's a good thing to have a culture of compliance. So with that, I will turn it over to Tracy. So
thank you, Rich. Thank you, Rich, and good morning, everybody. If you scroll back one screen, you can at least see what I look like in my picture. I do apologize. We just couldn't get my camera to connect into the meeting today. So hopefully everybody can hear me. And as we go through this. Hopefully, if you have questions, you get those in, and I'm going to try to get through the presentation as quickly as possible so that we can answer as many questions as possible. I will tell you, as you see the screen here at the outset, if we don't get to all of your questions, you've got my email address there, and I'm assuming that's in the handouts, and you can certainly follow up, and I'll be happy to answer any questions after the presentation. So we can go to the next screen. Oops, I went backwards. So this is just an outline of what we're hoping to cover today. Very 13,000 foot. This is a lot of stuff to cover in an hour presentation. So it's going to be very high level. But again, I'm happy to answer questions as we go forward. So let's go to the next screen. So fundamentally, I like to start with this because there's a lot of confusion on when we're talking about fundraising and registration compliance. What is it that is triggering all of this compliance stuff? And it's when you're asking for money. And the definition that's up here isn't any one particular state's definition, but it's representative of them all. And I like to use it because you can see that it's very broad. It's direct or indirect, express or implied through any medium. And so basically, as you can see from the check marks, if you're asking for a gift or you're selling a good or a service and you're doing all of that for the purpose of serving a charitable purpose or to benefit a charity, you are engaged in solicitation activity. And it's the solicitation that triggers the registrations. You could, be located here in New York where I am, and most of your donors are here in New York, but oh, you know what? New Jersey and Connecticut are often at play. And so you have a couple donors that might be in New Jersey or Connecticut, and you ask for money. Even if they don't give you any money, New Jersey and Connecticut would say, you solicited, you have to register. So it's the active solicitation that we talk about here. Next screen. So throughout the presentation, I'm going to have what I like to call my Tracy's takeaways. I have 8 of them, and through all of this, you'll see that's sort of my breaking point when I introduce a concept. And so here, if you're soliciting in a state that regulates solicitations, you need to be registered unless you're otherwise exempt or excluded. Most of the states require you to register before you even begin your fundraising, and most of the states have an annual renewal requirement. Next. So this is an overview of this, just what is the framework that we're in. There are about 45 states. I put an asterisk there because that's kind of a moving number depending upon who you're talking to. I include Arizona in my overall list, even though Arizona only regulates veterans organizations. I also include Texas, even though Texas only regulates public safety and veterans organizations. So typically, if you're doing a national solicitation, you're looking at, as a charity, registering in about 39 states plus DC. Fundraisers are going to be looking at about 42 states. So the 45 is a conglomeration of all of the states that have some kind of scheme to regulate. And it covers charities, professional fundraising councils, solicitors, and commercial co-ventures. And each state's got a bunch of registration obligations that they have to file. Next. So was this supposed to be set up as a polling question?
Yes, Ashley?
So this is polling question number 1, so we're going to launch that real fast. So polling question number 1, is a solicitation in connection with the sale of goods and services considered a charitable solicitation for purposes of state registration laws? Yes, no, or perhaps? I'm not going to spend too long on the polling questions just to keep everything moving along, but just be sure to answer them to receive your CPE credit for the day. I'm going to close out in just a second. Get those last minute votes in. And we're going to close it out.
Okay, well, I'm assuming you can see the results. This is interesting to me. I've never been a speaker where I've been on the receiving end of these, and it's fascinating to watch them come in. So for the 23% of you that said perhaps, that is the answer that I would also say. The reason being that typically, yes, if you're selling something and you're representing it's for a charitable purpose, it's going to be a solicitation. However, there are sometimes, an easy example that I can give would be, let's say a religious institution, not a church because they don't have to register, but a religious institution. They might be that, you know, their mission would be to spread the word of God, and they might be selling books about spreading the word of God. That arguably, if they're just selling it for that purpose and they're not saying that some portion of it is for a tax deductible contribution, arguably that sale of that book could go on a program service revenue line, and it would not be a solicitation under that circumstance. And so really depends upon the purpose of what you're selling, whether it's mission related or not. But I would say probably most of the time, the yes answer is the right answer. So a charitable organization is a broader concept than just a C3. I once actually had an interesting conversation with a lawyer when I was prosecuting in Pennsylvania, and Pennsylvania's definition is one of those horribly long ones that basically tries to capture any possible scenario that you would have to register. But at the state level, the definition of charitable organization is very broad. But Pennsylvania starts off with anybody who's qualified as a C3, and he goes, oh, my client's not a C3, we don't have to register. And I was like, well, you're a lawyer, read the rest of it. And when he read the rest of it, he realized that his client needed to register in Pennsylvania. And it was an important discussion because Pennsylvania is one of the states that, with the way that it's defined, it could actually pull in some for-profit organizations if they exist for the purpose of serving the community or the charity. An example that we had in Pennsylvania at the time was, it's an advertising company, but what they do is print calendars for schools, and they give them to the schools for free. And the way that they make their money is through the advertising in the calendars. And so they had ultimately had to agree that they are a charitable organization under Pennsylvania law. So and again, it can include individuals, and there are about 41, 41 with the asterisk. But again, as I said, it's usually about 39 states that require registration. Next. These are some common exemptions, and these are not by any means exhaustive. I just tried to pick the most common that we see in the work that we do in my firm. Of course, religious organizations is the one that every single state has some kind of exemption that would apply to a church. So if you're a church, you're not going to have to register anywhere. Some states in how they determine whether a religious organization is going to be exempt is whether or not you have to file a 990. If you have to file a 990, you're not going to be exempt under that state's law. So something a little bit lesser than a church is going to have to register in some states. There's always the dollar threshold, but it's important to realize, as I mentioned here, that it's in all but New York State. It's based upon your national numbers, not what you're just getting from the state. There's a different analysis when it comes to internet, which I'll talk about in a little bit. But if you're just looking at your total activities and you're engaged in some direct mail or other activity going into a state like Pennsylvania that has the 25,000 threshold exemption, Pennsylvania is going to be asking you for your total from your 990, not just from Pennsylvania. 25,000 is pretty easy to hit. So this threshold doesn't really apply very often anymore. Educational institutions. So if an educational institution is registering or soliciting nationally, they're going to have about 17 states they're going to have to register in based upon the way that either the exemption exists in the state and the way that it's defined. If you're limiting your solicitations to membership, that's another one where there's a pretty good number of states that will allow you to be exempt, but it's a very narrow exemption. Your solicitations have to be only to members. Usually they have qualifications that your activities have to be carried on by volunteers. Nobody can get paid. So it's a very narrow exemption. I throw in political organizations because that's kind of obvious. C3s can't engage in any political activity, so certainly a political organization isn't going to fall under the definition of a charity. Next polling question.
All right, polling question number 2. For the purpose of determining state registration exemption as an educational institutions must generally be tax exempt as either a school or church, yes or no? Polling question number 2 out of 4. So again, just be sure to get those votes in for your CPE credit today. And this isn't a quiz, by the way, so it is not graded at the end. Participation is what's most important. And we're going to close out in just a minute. And also thank you, Rich, for the happy birthday.
You're welcome.
All right, we're closing out and sharing the results.
Okay. This was a little bit of a trick question. So for those of you that answered yes, I would say that is the right answer, focusing on the word generally. But for those of you that answered no, if you didn't focus in on the word generally, you're also right. There are, in New York, for example, there are some weird kind of organizations that will fall under the sort of umbrella of being an educational institution. So there are some broader concepts, but I would say, 99% of the time, especially outside of New York, if you're going to get the benefit of an exemption, you're going to have to be tax exempt as a school or a church. Next. Next slide.
We're trying that.
Oh,
No.
sorry.
There we go.
There we go. So this is kind of an obvious, but in my experience, when I was back on the regulator side, I saw all of these things not happening a lot, and so for me, I like to throw it in here. It's pretty self-explanatory, but you've got to have everything filed on time. They've got to be accurate and complete and free of material falsifications, misrepresentations, and omissions. A lot, Rich was talking about his one example of a client. A lot of the ways that I built my cases when I was on the prosecutor side was because I kind of did a Sesame Street thing, and I said, which one doesn't look like the other? And I would take the registration form, and I would take the 990, and I would take the financial statements, and there would be a lot of things that didn't make sense. And, we built some cases just from engaging in that activity. So it's really important to make sure when you're filing things that you're looking at everything and making sure that everything is accurately stated and get them filed on time. I'm not going to list all these things. Anyone who actually is engaged in doing this process, that how it is a little bit overwhelming. There's a lot involved, and you're doing it for multiple states, and every state's form is different. And now they're going online, and they're going online with their own systems, and so every system is different. Trust me, I know how challenging it is. But this isn't, this is sort of meant to be a comprehensive list of, regardless of who you are, whether a charity or a fundraiser or a commercial co-venture, these are what you're looking at having to file with the states. The important part about this is, again, to know that it's annual. Not every single one of these things, the charter documents, as an example, don't have to be filed annually, but pretty much everything else is an annual filing. Some of the states, like California and New York, you register once and then you do a reporting form on an annual basis. Some states, like Pennsylvania and Florida, you just simply file the same form every year as a renewal. But it's effectively all just filing these forms annually. It's important to remember that the forms are public. Most of the states, New York is great. You can go right online and get anything that has been filed by a charity. They are working on making that available also for professional fundraisers and councils. North Carolina, everything is available online. So that's one of my go-to sources if I'm trying to find some information about it, any organization that might be registered. Other states, it's not available in their online system, but you can simply just make a phone call and you can get the forms. Like in New York, if you can't get it online, you have to do a Freedom of Information request to get the other documents, which is kind of a pain, but you're going to eventually get them. And then the record retention requirements are very important. And most important is the state of California. Most of the states, it's 3 years beyond the date to which they apply. So I usually say if you keep them for at least 4 years, you're good. California has a 10-year statute of limitations. And so anything related to California, you've got to keep the documents for 10 years. Next. Okay. this is important. This actually comes up a lot in the context of fundraising, and there are 2 states, well, 1 state in DC, that actually condition your ability to register to solicit in their states upon actually qualifying to conduct business there. It's part of their solicitation law. I don't really love it because our position, as you can see on the last point there, I have a question, is solicitation conducting business? Our position is no, it's not. In fact, it's very much not conducting business, and nothing about the fundraising world falls under any business definitions. Some states take the position that it is. I will tell you, for the most part, except for North Dakota and DC, where we're constrained to have to do the qualification in order to be able to get registered to solicit. When any other state comes and says, hey, California does this fairly frequently, hey, you're soliciting, you have to qualify. We say, no, we're not conducting business in your state. And they never push the issue. So as of now, there's no other state that is forcing anyone solely on the basis of soliciting contributions to have to qualify to do business. So this is very, very high level on conducting business. It's actually a very case-by-case analysis. I spend a lot of my time helping our clients try to figure out if they have to qualify. Some people think that if you simply have an employee in a state, does that mean you have to qualify to do business? And the answer often is no. The answer sometimes is yes. It really depends upon what I have listed there. Are you regularly conducting business in the state? And then the considerations, what are you doing there? How much of a physical presence do you have there? How many employees do you have? But most importantly, what is the nature of your activities when you're there? And I have this intra versus interstate commerce, and that's really a very important concept because under our United States Constitution, states aren't allowed to engage in any activity that would unfairly burden interstate commerce. And so if somebody is there, one person just as a convenience, I mean, think about the pandemic and how many of us are working from home as a convenience, but we're not targeting our activities to that state. It's more just a convenience. If we have one person in the state, there's a very good chance that that doesn't trigger foreign qualification. But I have a client recently that they said, oh no, we put someone in California because we really want them to focus on fundraising in California. Again, they don't have an office there. They don't have any bank accounts there. They have one employee there, but she is there purposefully to target California. So in that instance, that single employee did actually trigger the foreign qualification. So it's really a case by case and really understanding what are the activities that you have going on in each of the states. Next. All right. This is the related takeaway to number 2, which is if you are working with any fundraising professionals or commercial co-ventures, and they have obligations to have to be in compliance depending upon who and what and how the activities are happening, you have an obligation as a charitable organization to ensure that they are in compliance with their own requirements, and that to the extent that contracts have to be filed or reported, that you make sure that you are doing that properly. There's a lot of time spent on this issue. I spend a lot of my time working with our clients to really consider, do I have to file everywhere? There are states that would say, for example, with the fundraising council, well, you're using a fundraising council and they're giving you advice for solicitation. So they have to register in our state because you, the charity, are soliciting in our state. And I recently had a big battle with Pennsylvania about this. And they wanted my client to have to file that. Let's give an example. My client's located in New Jersey. They're working with an organization that's in Illinois. And that Illinois charity is soliciting in Pennsylvania. But my fundraising council client in New Jersey has no contact with Pennsylvania. They don't ever step foot in Pennsylvania. And most importantly, they don't give any advice to the charity to specifically target Pennsylvania. It's very high level, just strategic advice about fundraising in general. My advice to my client was, you do not have to file that contract in Pennsylvania. Pennsylvania disagreed with me. They filed charges against my client. And then at the last minute, after we had a lot of back and forth, we were literally the Friday night before a hearing on Monday, and he was asking me what witnesses I was bringing. And I said, I'm just bringing my client. He's going to testify about what the work is that they're doing and how it's not to Pennsylvania. Next thing I knew, he was sending a letter to the administrative law judge telling him he was canceling the hearing. So I never got a judgment, but that action there confirmed to me that he was agreeing with my position. we've had similar litigation in Utah, and they actually changed their law in reaction to the litigation we had there. So we feel pretty solid that it's a jurisdictional analysis. And again, similar to the qualification, you have to focus on, well, what is the activity happening with that state? Next. This is related, and it's really, really important. Communicate. So it's not only make sure that everybody's in compliance, but communicate with everybody and talk about, well, where do you think that you need to be in compliance? Because this is a right hand, left hand kind of thing. The charity is going to report and, you know, have to list all their fundraisers that are working in a particular state. And the fundraising council is also going to be, you know, doing their own reporting. And most times when a state starts to have questions is because one person was reporting something that the other one wasn't. And almost always that reporting didn't need to take place. And so my role, I send a letter, I say, sorry, it was inadvertently filed. It shouldn't have been. We're not doing anything there. And then they say, okay, and we're done with it. But Virginia, as an example, they said, we don't care if it shouldn't have been filed. It was filed. You have to now actually go through it and do all the reporting and everything that has to go with that. So it's really important to be careful that you do talk to each other and make sure that everybody, I'm not saying agree to not comply. I'm saying just agree that you agree with whatever your legal obligations are. Next. All right, very, very quickly, just because since I'm talking about all these different categories, professional solicitors are what you think that they would be. They're somebody who is getting paid directly or indirectly to solicit anybody for the purpose of benefiting a charity. They are allowed to have custody and control of contributions. They are allowed to get paid a percentage compensation. There's about 43 states that are going to have registration. The compensation piece is actually a really important piece of this. I actually was recently working with somebody due to a business structure that they had. There was one part of their business that was actually doing the fundraising, but they weren't getting paid. Maybe someone could argue that somewhere down the road there was maybe some indirect compensation, but it would have been so far removed that we took the position that there was no compensation, and we took the position that therefore they weren't soliciting. The other times that this is important to think about is in the context of, like, if you go into a grocery store and they say, hey, would you like to round up to the nearest dollar and make a contribution? Effectively, they are soliciting on behalf of a charity, but they're not getting paid, so they don't get pulled into this professional solicitor category. Next. Fundraising councils, there's someone, again, the compensation is a key factor. They're getting paid to help plan, manage, advise, anything to do with a fundraising campaign, but they themselves are not soliciting. And I can't imagine circumstances where they might have custody, but if they ever do, by definition, a state is going to roll them up into a professional solicitor category. The same thing is true with getting paid based upon a percentage compensation. And this comes into play a lot because most of the state's definitions say that a fundraiser council can only be paid for a flat fee rather than percentage. And a lot of the states go further and say, and oh, by the way, if you get paid a percentage, you become a professional solicitor. And if you're not actually soliciting, you don't want to be in that solicitor category because here, as you can see, registration is only 28 states versus 43, and the registration burdens are so much less. Here, you've got 28 states, and there's I think 5 states that require some bonds. On the professional solicitor side, it's 43 states. Every state requires bonds. That's an expensive venture. And then on the professional solicitors, they also have to do all of the campaign reports, which is really challenging. So if you're really not soliciting, you want to take great pains to stay out of that category. Next. Finally, commercial co-ventures. There are only right now about 7 states that really regulate this in terms of having any specific filing and reporting by the commercial co-venture. But it's becoming more and more, we're spending a lot more time getting clients coming in and having these CCV relationships. So it's really starting to proliferate. I think more and more companies want to have corporate social responsibility, and so they want to get involved in this. Engage for Good, which is a great organization that focuses on all of these issues. They've really been growing, and this is just becoming a very big activity. I don't know if other states are going to start to regulate it, but as of now, this is the universe. This is a for-profit company that's going to advertise that if I buy something from them, they're going to give some portion of the profits to a charity. That's effectively what a commercial co-venture is. The example I gave earlier of walking through the line and rounding up my purchase to the nearest dollar, that is not a commercial co-venture. It seems like it might be because it's a commercial entity getting money to give to a charity. The distinction is who is actually making the donation. That's the easiest way to figure out, is it a commercial co-venture or not? If the commercial entity is making the donation out of its profits, then it's a commercial co-venture. If they're simply passing along my donation to the charity, it's not a commercial co-venture. So we've listed here the states that regulate it, and I just want to mention California is optional as long as you file or follow some particular contract requirements and some payment requirements. You don't have to register in California. In Illinois, regulates charitable trust. Their position is that a CCV is a charitable trust, and so they actually make commercial entities have to register as a charity there. So that gets a little tricky. Next. I like this question.
Calling questions, all right. All right, a well-known national brand advertises on cable television and the internet across the USA that a percentage of its sales will be donated to a charity that only does business and otherwise solicits personally and by mail within the boundaries of the state of Wyoming. The charity is Lucky, required to register in many more states, C, involved in a commercial co-venture, or D, all of the above. And this is the second to last polling question. Just be sure to get those votes in. All right, and we're going to close out in 2 seconds. All right, closing out.
All right. These are interesting numbers. So the answer is all of the above, although as a lawyer, I can't help but, say it depends. I had a hard time with the bar exam because I could read every question a way that I could, have answered it yes. So it's the downside of being a lawyer. But I do think that as a general matter, all of the apply. Lucky is great. I love that answer. They're definitely, to me, the part that you can't see here in this part of it was that it was going to be, oh no, it is there. It's on TV and the internet. So the internet, if it was just the internet, I think that the answer would be much more narrow. But the fact that it's on TV, that becomes what's called a targeted solicitation. You're targeting an audience in a particular state. So wherever that is happening, that's definitely going to trigger registration. So, and it's definitely a commercial co-venture. So I think all of the above is the right answer. Next. All right. Again, this seems pretty basic. Your organization's solicitations must be truthful. You can't make any misrepresentations about the purpose or intended beneficiary. You can't tell donors that they're tax deductible unless they are. The middle one I just recently added. I didn't used to have this in my presentation, but I've been involved in a case in California that has forced me to add this in there. And it says you may not make any misrepresentations about the amounts of the contribution that the charity will receive. So the challenging part about all this, again, it seems pretty basic. You can't tell someone they're going to get, 80 cents when they're really only going to get 60 cents. But it's much more mushy than that. And I've been involved in a case with the California Attorney General that involves the percent deficiency statements that are on the bottom of a lot of donations, or I'm sorry, solicitations. And my client does both gifts in kind and cash. And the question became that when my client, who those deficiency statements were reflective of all of its activities, and it is a well-known gift in kind organization, But when it was saying that 95% of all donations go to programs that benefit the poor, the Attorney General took the position without contacting a single potential donor, I have to add, and said that it was possible that somebody might misunderstand that to say that 95% of all cash donations go to programs. And so we've been fighting with the Attorney General for 3 years. We've recently obtained a pretty good victory. The problem with the way that the case was brought, just saying that it was deceptive, is that all of your solicitations are protected by the First Amendment, and First Amendment speech gets the highest level of protection. And when you're going to come after somebody for a misrepresentation, you have to prove that they intended it to be a misrepresentation. And in our case, our client absolutely never intended that. It's merely an efficiency statement about their overall activities. It's on everything that they had, their annual report, everything. It's very clear that it was intended to be, about their overall efficiencies. Arguably, if anyone wants to try to say, well, it could be read one way or another way, I think in hindsight, yeah, okay, maybe, but they certainly never intended that. And under free speech, you have to prove somebody actually intended to deceive somebody for the purpose of making a donation. And so we've actually gotten a judgment that 2 parts of California's law are unconstitutional. So stay tuned. It's very likely they're going to appeal it, but that's where we are. So you have to be really careful when you're looking at your solicitations that you're not making any misrepresentations, or that you don't intend to anyway. Next.
Tracy, if I can jump in.
Sure.
I had a situation in California where an organization told donors that their contributions were tax deductible and didn't use the appropriate information, fair market value, etc. And the donor made a contribution that put them in excess of their adjusted gross income limitation and had to carry over the deduction, and filed a lawsuit against my client,
Wow.
which my client was forced to settle.
Hmm.
So what Tracy says is absolutely correct for many reasons, not just what she had mentioned.
Well, I just want to mention that in that scenario, we always say to the fullest extent allowed by law, because everybody's tax situation is a little different. And if it does involve anything involving like, where you're buying a ticket or you're, buying an item, then that becomes a different kind of disclosure that needs to be made.
Okay.
Okay. Number 6, so kind of carrying forward, in addition to your solicitations have to be truthful, there are a bunch of states that require specific disclosures. And again, this to me seems fairly basic, but I actually spent a lot of my time working on this. And so I just want to, if you can flip to the next screen. So this is about the disclosures, and we actually have on our website at perlmanandperlman.com, we actually have a full summary of all of the states and what their requirements are. And then for either a charity or a solicitor that are soliciting nationally, we've crafted a model disclosure statement that will satisfy all the requirements. What I want to really emphasize here is websites and emails and anything that's digital. Those are also solicitations. Your website, if you've got a donate button on your website, it becomes one big giant solicitation, and the disclosures have to be included there. You can do it with a hyperlink so that you don't have to take your whole donation page and make it one big messy disclosure, but it does need to be there. I want to just emphasize difference between physical and digital. So if you're sending emails and digital or your website, you can do that hyperlink. If you're sending physical, a newsletter, or you're working with a direct mailer and they're sending out solicitations, you can't just say, oh, go to our website for our disclosure. Physical has got to be the physical disclosure. Website, it can be the link. Those are my important points on that. All right. Fundraising on the internet. So picking up from the website, fundraising on the internet is a solicitation. You may have to register in your state of domicile plus other states. So next slide. So again, as a basic concept, a donate button is a solicitation. There was starting, I have to say, I'm kind of impressed with the regulators. It was even before I was one. In 1999, they really started to think about, oh, well, how do we regulate all of this and what does it mean? And so they sat down in Charleston, South Carolina, and started talking it through. And they really fell in on a jurisdictional analysis, as I mentioned earlier, the minimum contacts, and do we have sufficient contacts with our state to be able to say, yes, you have to register. And this is only to do with passive. I'm not targeting a state. I'm not thinking I want to go into North Dakota and solicit, but just by chance that my donate button is allowing people from North Dakota to make a donation to my site. So they came up with these guidelines, and based on jurisdiction, if you're engaged in any kind of fraud involving your solicitations, that jurisdiction is broader. So all I'm talking about is just the passive solicitation. And the next slide. Went the wrong way.
Did I go the wrong way? Oh.
Yep. So the Charleston Principles is an 18-page document. This is really the meat of it. And when I go through my clients and they're coming in and they say, I need to register, where do I need to register? I kind of go through 4 buckets with them. I know I only have 3 numbers here, but it works out to be 4 buckets. The first bucket is, where do I live? If I'm in a state that requires registration, no matter what, there's no argument that the state's got jurisdiction over me, I'm gonna have to register. So the second bucket then is, well, okay, where am I targeting my solicitations? Where am I sending direct mail, or where do I make phone calls, or where do I have major donor meetings? Where am I out there, effectively actually going in there and targeting? So I add those to the list right away. This is where we start from. So now let's say I've got 6 states out of 1 and 2. So the rest of it is, now what's happening with the rest of my activities? I'm not targeting anybody. So the next bucket is, well, where am I receiving contributions that are substantial? And that requires you to have to actually sit down. Most of them come to me with a spreadsheet, and they've got every state listed. They've got the number of donations that are coming in from the state, and they've got the dollar value coming in. And I always start with the substantial because that's easy. Everybody agrees that number is 25,000. And so if I have any particular state where, oh, wow, I'm getting 25,000 in through my internet button, that's pretty surprising. I'm not targeting them, but they must like us. That's going to be added to the list of having to register. And then the final bucket is, once I've gone through that, now where am I getting some repeated and ongoing? And that's the really mushy part, because there's only 3 states that have defined that for us. Mississippi says if you get 25 or more out of Mississippi, you have to register. Colorado says if you get 50 or more, and Tennessee says 100 or more. So they've actually put that into their law, and that gives us guidance. So we kind of settle on all of our general advice. We go with the 50. And so we go down that list and see if we've got anyone hovering around the 50 or more. We talk about, does that make sense to have to register in that state? I want to just mention one caveat. Florida specifically did not vote for the principles. They don't follow the principles. Their position, not that I agree legally, but I always like to mention it, their position is that one donation from one person for $1 would trigger registration in Florida. So it's just important to keep that in mind. Next. All right. So in addition to the whole registration, what are regulators spending time thinking about on the internet? And the fraudulent solicitations via the internet are probably their biggest concern. And the challenge is that capturing people when they're doing it, because you can think of any disaster and how quickly organizations can get set up, and they can be gone. And for me, when I was a regulator, the best example of this was Katrina. When Katrina hit New Orleans, that was a last-minute hit. Katrina was originally headed for Tampa, Florida. And the only reason why I remember it vividly is because I was actually in Tampa when Katrina hit New Orleans. And my mom's freaking out. Oh my gosh, you're in a hotel. What are you going to do? And then all of a sudden it switched. Websites were up and running within minutes of it hitting New Orleans for, Katrina, New Orleans, help people. And they were most of them were fraudulent. They got a lot of money, they shut down, and they were gone. And there was never any way to be able to get that money. So it can happen really, really quickly. I don't know how regulators are dealing with it now, but they definitely spend a lot of time trying to figure that out. But it goes beyond that. You know, they look at all these platforms that are out there, and they, you know, I use the word fraudulent pretty loosely, as I mentioned earlier with the misrepresentations. They're looking for anybody that isn't fully disclosing everything that's happening on the website. So a platform that could be doing it through one single entity, a donor advised fund, but they're not telling you that, and so you think your donation is going to charity A, but really it's going to charity B, and before it gets to your charity A, ultimately there are going to be several layers of fees that come off of that. You need to know that when you're making a donation, and many times that is not fully disclosed. A lot of the states still really care about whether charities have given consent to have their name used on fundraising platforms, transparency on the platforms, as I just mentioned, and of course, any compliance with the regulatory requirements. Next. So my final takeaway point is that charities are responsible for establishing and maintaining control over all their fundraising activities. So this includes anybody. This includes employers, volunteers, professionals that you engage, commercial co-ventures. I don't think there's a single state that doesn't have this law, or have this provision in their law. The truth is that most times, unless there's a real clear situation, I prosecuted a teleservices organization in Michigan one time, and along with the charity, because it really was clear that they were colluding together. Most times the charity will be viewed as the victim because they just didn't know what they didn't know, or they didn't know that somebody was doing something, you know, fraudulent behind their back. But there is a responsibility that you need to establish this control, and it's not just for regulatory purposes, it's for your own protection of your name. Because even if ultimately a regulator won't prosecute you, your name is going to be thrown through at the same time as any bad professional fundraiser, because they're going to tell the story about this bad professional fundraiser that was doing this bad stuff, and they were doing it for this particular charity. And so you'll get thrown into the mix on that. So it's just really important to remember what is of value to you, not only just getting that money, but your public relations, your donors, they're going to care if you're doing good stuff with their money. So it's kind of a broader concept than just minimally complying with the law. I just want to mention volunteers, because that's the hardest part to really pay attention to. People are out there, they're well-intentioned, they might set up a GoFund. I mean, I used to talk about this and say they might go out on a corner with a can and ask for money, but you know, we've progressed now where they might set up a GoFundMe page, and you may not know about it, and your name could be used for purposes that you end up not even getting any money. I usually recommend that you know, Google search alerts are set up so that people can monitor if things are happening in their name. And then if somebody wants to do some event, you want to know about that, not only to make sure you get the money, but it might be some kind of an event that, you know, doesn't really square with who you are as an entity, and you might say, no, I really don't think that's a good idea. You know, you might be I think a few years ago, Susan Komen had done something with Kentucky Fried Chicken. They got all kinds of backlash because Kentucky Fried Chicken isn't healthy eating, and how dare they get involved in something like that. So that was kind of a PR problem for them for a while, and they had to work through and sort of rectify that. Someone might want to say, hey, we're going to be at a festival, and we want to set up something to, you know, benefit you. And there could be some liability issues. And you can set up, there are third-party fundraising agreements that we give to some of our clients, so that it's very clear who's going to ultimately have liability if things go wrong, and you have tracking in place for making sure that you get your money. You have control over how your name is used, all of that fun stuff. So it's very important that you establish those things. Next. This is, I'm kind of repeating a little bit here what I've already kind of woven in. So it's just very important that this is what the states are looking at in terms of the fraud stuff. I threw in there my recent case on the state must prove intent. But donor must comply with donor imposed restrictions is very, very important. And it's not even just that somebody might steal the money that's restricted. unrestricted money. They might just temporarily borrow it, and even that is not okay. There have been cases where somebody borrowed the money to keep the lights on, and it wasn't okay. And if you've donor restricted money and you need that money for some other purpose, your only option is to go to those donors and ask if the restriction can be released. Otherwise, you have to live with those restrictions. Next. These are just areas of specific concern that right now the states spend a lot of time thinking about. The high fundraising costs per se might not be a problem, but they are something that causes a regulator to start looking at everything else. And the same is true for compensation. You may have satisfied the IRS analysis for excessive compensation, but a state regulator might say, yeah, but we really think that when you look at compensation versus how much money is being raised and ultimately how much is going to make it to the charity, and you combine that with the high fundraising costs, so at the end of the day, $1 million is coming in, but only $10 is actually going to programs. Those are going to be things that are going to cause them to start looking at what's going on there. Gifts in kind, something that right now, especially California, is very focused on. That's actually what triggered the case I have in California, and then they saw the solicitations. But the gifts in kind, are you valuing them properly? Are you establishing that you have control over how they're going to ultimately be spent? Or are you daisy chaining them? Are you making sure that the gifts that you're receiving and giving out are in alignment with who you are as an organization? If you are a cancer organization and you're giving out medicine, is it really to further your purpose of cancer, or are you giving out, I don't know, birth control or some other medicine that might not actually be relevant to what you're doing, just so that you can try to enhance your numbers? And these are real cases that I'm mentioning. So it's very important to not only make sure it matches your purpose, but then ultimately it gets used, it goes to people who can benefit from it, and then it gets used for the purposes that it's supposed to be. Joint cost allocations are the other piece. It's not okay to just kind of eyeball, and if you're engaged in doing fundraising where you have a public education component to it, and by public education, it actually has to really be for somebody to take some action to benefit the organization, not just that you're giving statistics about who you are and what you're doing. And you can't just eyeball it. You got to go through and really calculate what goes to fundraising, what goes to programs, and what goes to admin. We actually engage people to help us analyze our solicitations to really make sure they're done right. I think this is my final slide. This is also a new, thanks to Rich, and I like that I added this in because we spend a lot of time working on these days. People with the internet and wanting to do raffles and doing them across the country. So raffles are small games of chance, and under every state definition that I've ever looked at, they do become sort of an illegal gambling, but they can be done by charities. A raffle is very limited, and it's not something that we've ever figured out a way that could cost effectively be done across the country, because raffles are regulated at the local level. Almost every municipality is going to have some kind of registration in order to conduct a raffle, and so to be able to do that across the country is simply not possible. What we do, we counsel our clients, is instead of doing a raffle, we set it up as a sweepstakes. The main difference between a sweepstakes and a raffle is that you offer a free method of entry, and there are a lot of rules around sweepstakes that have to be followed, and we actually engage outside counsel for that as well. But it has to not only have a free method of entry, but the people who enter that way have to have the same chances of winning, are the two sort of most important criteria. But if you have it set up effectively or properly as a sweepstakes, then it can be done by a for-profit entity, and registration is not required by the person conducting the sweepstakes. There's no sweepstakes requirement. I think Florida might have some sort of bond requirement. It's very limited, but it still is a solicitation. So there's still going to be a sweepstakes or a fundraising registration that will be required, but the sweepstakes itself would not have to be registered anywhere. I think I got in under the wire. Last polling question.
All right, yes, just the last polling question here that I just launched. So raffles may result in charities being required to register under a state's charitable gaming rules, excuse me, in addition to charitable registration, true or false? And this is the last polling question for today. So just get this last vote in. And I see somebody asked if there will be a way to watch this webinar again. Yes, so after this webinar is completed, we will be sending out a recording of the webinar and the handout notes again.
And as I said, if someone has a burning question that didn't get answered here today, please feel free to email me.
All right, so we're going to close this out in just a second. I see we have 90% votes in. All right, and we're going to close it out.
All right. Whoop, it disappeared, but most people said true, and yes, that is definitely a true answer.
Well, I just want to say thank you to Tracy for a great job. And you've got Tracy's contact information. You also have contact information for me in the webinar. Very appreciative of Tracy's efforts today. Thank you again, Ashley. And most importantly, thank you to all of you for participating in the webinar today. So with that, we will sign off. Thank you.
Thank you, everybody, for attending. Just be sure to complete the survey that will pop up once we close out here today. And as Rich said, thank you again to Tracy. That was a wonderful presentation, and Rich, and everybody who attended. Have a good rest of your day, everyone. Bye.